Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
News today, May 11th. We have one red folder. Looks like the Bank of England has the red folder at 10:30 this morning. Other than that, it looks pretty quiet for the day. Let's check the Forex Factory for May 11th. 2 o'clock in the afternoon. Looks like there's a couple of red folders. May 11th, 1400. 2 hours and 26 minutes left. So that's not quite the same. These must be different time zones. And then at Bank of England at, like I said, at 10:30, so 10 o'clock. So nothing else too exciting there. Let's go to the charts. Let me double check to make sure there's Eva. Let me bring her over.
Hey, good morning, everybody.
There's Eva. Good morning, Eva.
Good morning, good morning.
And we shall get started with the charts. We just got an alert on the 15-minute Aussie yen, and we have a down arrow and into a zone. Let's see how much zone we have here. We have to the zone, we have 7 pips, not a lot of room to the downside, so it's probably not going to work. Let's put our template up and check the template and see what else we have.
I don't see your chart.
You're not seeing the chart? Oh,
no,
okay.
I see your MyFX book.
Okay, I guess I didn't make the switch. How about now? I'll bet you see it.
Yes. Yes.
Okay, good. All right. So let me get the template up. Like I said, first thing I'd like to do is put all the moving averages up there so I can see what direction things are. We did get a bounce and a break of the 200 moving average. We're having some consolidation right here. This thing does have some downward potential. Let's see what kind of range we have. It is in an definitely it's in an uptrend. Looks like the 200 moving average is flattening out, so we are getting some consolidation right in this whole area right in here. There's not a lot of range between the two, 22 pips between. So it's ranging about 22 pip range with strong uptrend. This could just be a nice little rally, a little pullback. If I draw a Fibonacci off of this, I would be looking at this Fibonacci right in here. And we see it pulled back 61% to form a new zone. And now it's sort of stuck between the 61 and 38. So right now we're going to stay away from that, but we'll keep an eye on it, see if things change a little bit. We scroll out a little bit on this. We have our Fibonacci zones, and we have our arrow alert, which I'll put right about where the price is right now. It's not a bad little, it wouldn't be, the problem with this one is it's right between right in the middle of the zones. It's got a zone that just formed, and and plus it's in an uptrend. This wasn't a nice uptrend all day yesterday. It made a high, pulled back to 61%, and now it's basically just basing inside ever since yesterday. It's just been basing going sideways. Not a lot of enthusiasm to take that trade. There's our money zone. And we could check and see what our overnight highs and lows are on this one. Here's the overnight high. Here's the overnight low. And right now it's stuck in between. It did try to break out of the top. It didn't go anywhere. And so right now it's there's just nothing that's interests me on this one. Let's go to the next one, see if there's another one in the works here. We'll keep this one on the side. We'll maybe get back to that one again, see if it breaks out at all. But right now, I'm not anticipating anything too much. Let me do this. Let me pull this over. Here's our heat map. Here's our where things are going right now. Right now, the Japanese yen is strong on all 4 time frames. The Canadian dollar is weak on all 4. So right now, the yen versus the Canadian dollar trade to the strength of the yen. British pound to the CAD, British pound to the CAD. So I say the yen, even possibly the euro against the Canadian dollar. That would be what I'd be looking at with that. So yen, British, and euro against the Canadian. Canadian yen, let's take a look at that one, see if there's anything this coming right down into a zone. Nothing there. British yen or British CAD. Check that one out. Nice little hanging in right up to the, it said the British pound was stronger to the Canadian dollar. So this, but it would have to get through that zone first before we could do anything with that. We said the yen was strong. CAD yen, so you look at that one. We'd already talked about that, I think. Aussie yen, not too, let's see, where was the Aussie? The Aussie is right in the middle, right in the middle, right in the middle, right in the middle. So no real clear direction with the Australian dollar. And that's about all we have. So right now we have some time for some questions and answers.
I've got a question for you.
Okay, go ahead.
Would you be able to show on how to add the different moving averages that you have on your
Sure.
chart?
Sure, we can do that. What we'll do is we'll get I'll just pull up another chart. Here's a fresh chart. This is a default chart, has the arrow moving average. And to insert a moving average, just come over here to the upper left-hand side in your little tab where it says insert. Click on insert indicators. And indicators, it comes down, it would be a trend. Come over to the trend, come down to moving average, pull up that little window. And I have 4 moving averages. I have a 5, and they're all the ones I have are exponential, except for the arrow. That is whatever it is. But I have a 5-period exponential. I make that one green. I make a little bit thicker green. Then you can change it. The next one I have is a yellow one. Just change this to a 13 and make this one yellow. And I usually have that one a little bit thinner. And then the other one I have is a 62. And you'll probably see that one being orange on my charts here. And so we have a 5, 13, 62 exponential. And then last but not least, my purple one is a 200. Just make that into a 200. Change this to a purple. You have to do each one of these individually. And then click OK. And there it is. And then when you want to save the template, just right click, template, save the template. This little window is going to pop up, click OK. And then just give your template a name. And that way, when you pull up when the charts pop up, all you have to do is add the template. You have all your moving averages together and you're all done. Hopefully I didn't go too fast on that. So now every time I pull up my chart, I just pull up the template, load my template, and here's where my moving averages all are. And then boom, there are my moving averages. And I like to see before I take the trade, I like to see an arrow. And I like to see all 4 moving averages going in the right direction, which means the 5 is going to be the fast one. That's going to be the next fast. The arrow moving average is going to be somewhere between the 13 and the 62. And then I have the 200 moving average. And when I get the arrow, I like to see all the moving averages heading in the right direction. And I'd like to see enough room to the zone for at least 15 pips, because I'll take, I used to use a tighter stop and I use a tighter take profit. So if I have a 15 pips to the next zone with the arrow and moving averages going in the right direction, then I'll usually oftentimes I'll take that trade. It's as simple as that. And that's pretty much the criteria I use. I just wait for that to happen. I just keep looking for the charts, and when I get the arrow, like this one, had I been here at, this was at 1300 chart time, which was 7 hours earlier, so it'd be at 6 o'clock this morning. We had this arrow. This zone was probably still here, and you can see all my moving averages are in the right order. And then you can just follow down. And I usually can keep my stop above my 200 move. If everything's moving in the right direction, we had the crossovers. Here is consolidation. We had all the crossovers. Here is an arrow. This would have gotten me, if I had this was a bounce arrow to the go side. I would have had lots of room to the downside. I could have gone for 20 pips. I may or may not have, probably wouldn't have gotten the 20, but I would have gotten the 10. It pulled back, retested this zone, gave me another down arrow. And then that would have given me, and that would have gotten another 20 pips. So on this scenario right here, all my moving averages are in the right direction. I had a bounce arrow, had room to the downside. The arrow strategy says 20 pip target, 40 pip stop. Stop would have been way up here above all these red zones. You've had a lot of barriers to keep you from getting stopped out. And you have had a nice target, but you have had to wait. No, right now you have been waiting on a 5-minute, this is on a 5-minute chart. You have been waiting for 58, 55, 60 times 5 be 300 minutes. So that would be about 5 hours. You've been waiting before you've gotten your target out. Here if you have gone for a little bit less, you could have taken a bigger position, been out in 10 pips, and you've been out within about 35 minutes. And that's pretty much the way I like to trade. I like to get in, I like to get out, and then I like to be done. I don't like sitting in a trade for hours on end, waiting for it to, wondering if it's going to stop me out or if it's going to go. So that's how that's all done. Let's take a look at, let's see, I think we looked at that one.
Al, excuse me just for a moment, if I could.
Sure.
I just wanted to remind everybody, please put your questions in the Q&A. And when you do, please give us details. Don't just throw up a currency pair with nothing else, no references to what it is you want us to do with it. Give us time frames, what you're looking at, if you're in the trade, that type of stuff, so that we have.
Yeah, give us whether it's a long or a short, whether you're in long or you want to see it. If you're not in the trade, you just want to see it, just let us know at least what time frame you're looking at. That would be helpful. Thanks for bringing that up, Eva. I keep forgetting to make that mention. Yeah, because if you put in the chat box, we oftentimes don't see it. Sometimes the attendees like to chat amongst themselves and make some comments. But if the questions are there in the question answer box, then that way we can go through, we can see which ones we've answered, and then we can take them off so we don't get confused with what hasn't been answered and what has been. Please reply what numbers, like 1362, 200. Did he miss any? No, you missed the 5. You forgot the 5. I like to use a 5.
I responded to that one already.
Oh, you did? Oh, okay.
Yes.
Oh, okay.
Make sure you're looking at the open questions when you go check it out.
Yeah, that would be helpful, wouldn't it? Okay.
Yeah.
That's like, I know that you do a wonderful job. You and Christine do a great job keeping on top of those things for me. Let's see. Actually, we have an Arrow 30, a German 30 alert. Let's see what. I don't like trading the indexes until the U.S. market opens, or at least not before 9 o'clock. Usually around 9, sometime between 9 and 9:30, you may get some good moves on the indexes. Right now, there's nothing here. I don't know why I got that must be an old alert. I'll just take that off so I don't wait for a new alert comes in. Let's see, what else do we have? We already talked about that one. There's an Aussie Swiss 1 hour. Now you can look at a 1 hour chart and see if there's anything. You can always scale it down to a lower time frame for an entry. So what I'll do is I will. Like here's an hour chart. I'll mark where the hour is, but first I'm going to pull up my moving averages. Load it. Put my moving averages in. There's my moving average. You can see right now if I blow this up You see the fast one's a green. That's in the right direction. That's above everything. The yellow one is crossing the arrow and the 62. So it's a green, yellow. We have the orange between, yeah, actually right now everything is just barely breaking out in the right direction. If I go to a lower time frame, I'm on a 1 hour chart. If I go to the 15-minute, you'll see that a nice move up. The green's still above the yellow is above the blue is above the orange, and the orange is just now crossing over the 200. So we have a nice little trend moving up. You can see where it's making high, higher low, higher high, higher low, higher high, higher low. This thing is trending. So when it's trending, this would be your target up in this area. So we had the arrow. Let's go back to where the alert was. And we had it right off of this candle, so I'll mark that. That's where the alert was. I can check the distance here. From here to here. That's 13 pips. That's it's marginal. I like 15. I got 13 and a half, so that's a possibility. Everything's still in the right direction on the higher time frame, which is a good thing. I'll go to my 15-minute chart. I know where my arrow was. It's right here. This is where the alert came in. The zone's still the same. I'll mark that. And the question is, if you go to a lower time frame and see if there's another zone that's going to be kind of in the way. Let's go to a 5-minute, see if there's any zone. So you can see right now there's a zone right here in front, and here's where my target was on the 1 hour chart. We have this little pesky zone right here that's going to kind of give a little bit of a problem. You can see where a strong move up, retracement, strong move up, retracement. Not as strong. If I draw a stick on this, and see how far the pullback was. Pullback was right about to here. Let's see, here's the first move. You know, you can watch and see how these things are getting a little bit smaller and smaller each time. This is about where, that's about right. So that was the first impulse move. Next impulse move, you can see it ends up a little bit shorter. Usually after about 3 waves, you'll start seeing maybe a little bit of a retracement. So right here's the next impulse. Come over here to where it was pulled back, see how far it goes up. See, it got a little bit shorter still. This one was a big one. Next one, not quite as big. Next one, still impulse, but again, each time it's getting a little bit shorter and shorter. And now it's got this little zone right here. So now the question is going to be, is this a turnaround point? Is this going to be where it's going to turn around? Could this be where the M is formed? Here's the first leg of the M. Here's the retracement. Now it's coming up to see if we're going to get a little bit of a wedge in here. Right now, I'm looking to see if it maybe stops somewhere right in this area and maybe start looking to retrace. We do have an uptrend. This could be we could be looking for a pullback back to this area. This is our uptrend. Here's our 200 moving average. Everything's still all my moving averages are still in the right direction for the upside. So I still don't want to be taking it short. We do have a little bit of a pullback. If we look at a Fibonacci, take the Fibonacci from here to here, we are in an uptrend. So we'll go from low to high. See where it pulled back. This one pulled back to the 78%, which is fairly deep, but not too bad. It's sort of basing in between the 38 and 61. I'll mark that. So right now, this is the zone that this thing is sort of playing in. I would sort of expect this thing to maybe come back down, back and retest this zone before it goes up higher. Here's the impulse move down. Here's a retracement. A lot of times you'll get a 3-wave retracement coming back down to retest. You still have the moving. Well, big question right now is, will this 5-period moving average cross over and close below the yellow line? You can see what it actually already did, crossed over, came back up, tested the yellow, pulled back. Now it's crossing over again for the second time. Let's go to a lower time frame and see how the moving averages are looking there. And you can see that right now here's where this was the high, it crossed over. The green one crossed over, tested it, came back. So this area right in here is pretty significant. Right now, it looks like it wants to pull back a little bit more. I would say we're looking at see if it's going to retest this zone right here. It's 50 to 61% retracement. It hasn't broken through that. It did break through that a little bit right here, but it's consolidating. So you don't have any real clear direction right now. It's just basing, trying to decide which way to go. Not a bad way to stay out of this trade. Here is your alert right here. Had a pullback. And I would say if we get a close above this 38%, we may be able to catch some pips going to the upside. But that's only 3 pips. There's only 3 pips to this red zone. So you just don't have the room to make any progress till you get your spread out. The Aussie Swiss, check the spread on that. And you'll see it's 1.7 spread, double that for your in and out. When you enter the trade, you'll lose some pips on it. Each time you trade, you're going to lose the spread. So that's almost a 3-point spread. And if you took this trade right now to this target here, you're only looking at 2 pips. You wouldn't even be able to get your spread out of there before you start running into a zone here. So, but if it breaks that, then we have a shot at this area up here. And then if you got to close above this, then you have a shot. That's only going to be another 9 pips, but even that wouldn't be great. So it's just not ready to take a trade on that. Let's take a look at the Swiss yen. Looks like the yen's been kind of active this morning. The yen was the strong pair. Still strong, still strong. I'm going to trade in the direction of the yen's strength. Swiss yen on 5 minutes. Right now, we would want to be going short on that because the yen is the stronger of the two. It's still stronger, still stronger. Swiss yen. Let's see where our moving averages are. Now there again, we're right in a zone. It is making new lows from yesterday's money zone, which is right up here. So it did break that. Let me get my moving averages up here. And see what we have here. Everything's in the right direction. It had the 62, the arrow have now crossed over the 200. You can see the 200 is kind of flat, which gives me the some pause that is somewhat range bound between these two zones. That is a 50 pip zone, so that's within the realm of possibility. And we have to see if it's going to break through this. How big is this zone right here? This one that's 13 pips deep. I'll go to a 5-minute chart and see what that looks like. Here's our strong move down. Here's a retracement. Now the question would be, is there enough room to be able to break through this zone to get to the next target, which would be down here? This would be the target you'd probably be looking for. That's 30 pips, but it's going to have to get through that. If it can break through, if the yen can stay strong and break through this 120.32 area, you still have 20 pips to the downside, and all the moving averages are correct. This thing could possibly give you a nice little trade in time. We had the bounce arrow. Go would have been here. It would have been close to your 20 pips. You could have at least gotten half of that. That was off a 5-minute alert. This was back at, let's see, that was at, well, that was 5 o'clock this morning, 6 o'clock this morning. This is
Hal?
Swiss. Yes.
Sorry, when you have a moment, I have a request if you could have a look at the Aussie US buy on the 15-minute.
Okay, we'll keep this one in mind. Let's see. I mean, Swiss yen. Okay, Aussie US 515. Oh, not looking too bad. Here's a bounce arrow. Go right there. Had a pullback. Actually, this one's actually looking pretty good, actually. See, check our Fibonacci. Here's our move up. Here's our retracement, 50% retracement. I'd be putting I'll make my zone. Here's a 50% retracement. I'll have a little, this would be more or less my stop zone. And this would be the target to the upside. Actually, I kind of like this one. Let's see where my moving averages are on this. This is why I do this first, so I don't have to redraw those. Moving averages are in the right direction. Strong move up. Here's the arrow. Go. Here's the pull. It had the arrow. Still went higher, pulled back towards the arrow, and that's making new highs. I like this area. This area would be a target area. Use that for a target. Here, show my Fibonacci. Aussie US. Let's see. We'll see how strong that is. The Aussie was kind of in the middle of everything there earlier. See if it's getting any stronger. Here's the Aussie. US is getting a little bit stronger there. Aussie strong to the US dollar. Aussie strong, not by much. Kind of in consolidation. Can't really go by that chart. And let's see, insert shapes. Here's my 50% retracement to this point right here. I wonder how much, if I were to take this trade, I want my stop below down in this area. I could go with a, let's see. From where it is right now, do we have room up here? We have only 10 pips before we run into this little area over here, which could be a problem. Bring this down. Bring it down right to the top of this candle. Here's a nice extended range candle. Came back, started testing. This area here was broken off of this. Aussie Swiss 1 minute. This one's tempting. Let's see what it looks like on the 5 minute. There's probably a little zone right there. Problem. Right where this formed a zone right on this pullback. Strong move up, retracement. It's coming back up right now. It's retesting this area. So here's your upper wedge. This could be a trap right in here. Remember I said the Aussie and the US were neck and neck as far as strength goes. So I don't think one's going to overshadow the other, which means it's going to be kind of basing into this area. And we have a low, high. Here's a pullback. Here's my trend line. Here's my wedge. Now, if we can get it, if it breaks this way, it still has, it's going to, I would be waiting for, I'd be looking for a pullback to the blue zone before I would take this. And I think it's going to be basing in between here for a while. 12, 13. You have about a 15 pip range between the red and the blue zone. So I think it's losing a lot of its steam to the upside, and I don't think it has any real strength or any real direction at this point. So if it can break through If it can break and continue, then if it can break through the 0 line, break through this zone, it could very well have some steam to get up to the 38%. And that would maybe give you, let's see, what would that give you? Let's see, 11 to here, 15 pips. I'd have to see some strength to the Aussie before I'd want to take this. I'd like to see a little bit more confirmation that the Aussie is a little bit stronger. It is starting to get stronger here on the 5-minute. It is starting to spread here on the 15. Getting a little better spread here. It is starting to show some strength right now to the US dollar. That's good to the upside. Yes.
Sorry. When you're just, I didn't mean to interrupt you. I thought you were done with this one.
No, actually, I kind of am.
Okay. Philip is asking if we can have a look at the US Swiss on the 15-minute possible buy.
US Swiss, US Swiss, 15-minute. This may be a lot the same type of thing. I'm seeing some characteristics that look very similar here. Oop. Template, load. Moving averages. Well, we have a 200 moving average just sitting right here. It did get penetrated, penetrate again, rejected. Let's see. Possible buy. Let's see what direction do we have here. Let's see where our zones are.
I did notice on your relative strength that they're kind of neck and neck, these two.
US, Swiss are, US is starting to take over a little bit. Not much difference there. Neck and neck here. Bottom 3 there. So yeah, there's still, looks like the US dollar is trying to gain some strength. I don't know, it's not conclusive yet. Let's see, we do have looks like we are in a downtrend. You can tell that by the 200 moving average. We have a little zone right here, so we'll mark that. And we'll spread this out a little bit. And we have basically we have a high, a low, a lower high, higher low. So right here's our wedge right in this area. Here's my anchor, here's my hit, here's my trend line. And you can see the moving average is coming up right about the same place where the trend line hit. It came up, tagged this little area, was rejected. So no room to the upside on that one. The sellers came in, not with any great force. Here's the anchor, here's the near hit, here's the third hit. And so we are in a downtrend. And we have the moving averages are not in the right direction. So right now it's kind of in the consolidation mode until we at least get this green one to cross through everything. I want to see the green one be all the way leading the pack on the downside or leading the pack on the upside. But right now you can see it's right in the middle. You have your 200 up here, you have your 62 down there, and everything else is in between. So right now this is sort of in a consolidation zone. Here's my 200, here's my 62, and everything is right now in the middle of that. So once it breaks out of this area, we may have we may get some direction. I'll wait for a breakout and then wait for a pullback to be able to come back in to maybe take it short or a breakout to the upside. More than likely it's going to be to the downside since this thing is in a downtrend with a consolidation. So no trade there.
I do have a couple of questions for you though in
Okay,
the Q&A if you're ready.
I'm ready.
Okay, the two of them both involve the moving averages. One of them is basically when you're using the moving averages, should you check the last few hours, moments, or whole direction? Basically, how do you see grand change? I think they're trying to figure out how to use these, and in conjunction with that, Kristen also has mentioned when you're using the multiples, is there a particular order they need to be in for it to be an additional confirmation?
What I like to do is I like to start on the 15-minute chart and see, and I want to see them all in the right direction. Preferably on the 15-minute, I like to see them all in the right direction.
Please explain to them what the right direction is,
The
because
right
that's
direction means is that you want the faster one, which is the five period is your fastest one. Your 13, which is the yellow, that's the second, that's the next fastest. Next one would be the arrow, which is the blue one. So I want to see a green, yellow, blue, orange, purple. That tells me they're all lined up in the right direction, and that would be, and you follow the green one. So the green one should be leading the pack on everything. If I see a 15-minute, if I see everything on a 15-minute, like over here, for example, here's the green, here's the yellow, here's the blue, here's the orange. But now we've got this one's out of sequence. This one really should be below here if it's going to be trending. So when it's get an arrow up, it says, okay, go long on it. The green one's in the right order because it's leading the pack. It's going faster because it's the fastest one. So these are all in the right order. But but when I see this 200 up here, that's going to be my first target because I'm going to expect it to bounce off of that, which you can see where it got the arrow, came back up, went up to the purple one, and it bounced back off again and retraced. Now it did finally break it, but not with. But this thing is still in the wrong let's see if I can pull it. And then once it's trending, like here, you see everything's in the right direction. Here's the purple one, it's going the slowest, orange, blue, yellow, green. Now, when you see that that's on the 15-minute chart, I like seeing it. So now I know I'm in the right direction on a higher time frame. If I go to a 5-minute chart, and as you see this thing, this is your impulse move down. When you see it pull back, if you can get this, if the green one can come up, let's see if I can show this here. Let's just take it. Let's see what I'm trying to look in a place where it kind of. Let me scroll in a little bit more here. Trying to find where you can see it. A good example is like this little area right in here. Let me just mark this so you can so we don't lose the spot here. See this little area right in here. You see where the green came up to the yellow, but it couldn't cross the yellow. This is a strong move down. The green came back up, tried to cross over the yellow, couldn't cross over. When you see that when you see the green one hooking up to the yellow one and then get rejected, that's usually going to mean it's going to be another move down to the downside. So I try to look for this thing to pull back, but not have that cross. If I can move that. I don't know if I can. This is where trading, where this gets a little tough to see it. You can see where it pulled back. So here's a down move, pull back, small pullback, couldn't cross over, made a new low. That was 15 pips right there. You could have gotten your 5 pips out of that. Now you have the crossover. It came back up, retested this one, but you can see where one of these 4 moving averages is going to be the one that's going to follow. So a lot of times, usually what I'll do is I usually just go for my target. But as long as this yellow moving average doesn't get crossed or closed above, you could probably still stay in that trade, maybe go for a few more pips. But that's how I use the moving averages. And I'll go to a lower time frame. I don't know if I can show it on this or not. I just can't bring it over enough to be able to spread it out enough. But basically, you find it where all of them are moving in the right direction on a higher time frame. And once they're there, you look for the pullback. You get the pullback, and then then you can do it on a lower time frame. You get the pullback, and then so here's your move, here's your pullback, and I'll look at this. Where I'll draw a Fibonacci from here to here and see how far it pulls back. Here's my here's my impulse move. Came back down. You see it pulled back to the 38% line. Pulled back, still respected the 200 moving average. Now you did get all the crossovers here. So that was on a 5-minute chart, you'll get more of that on a 5-minute, especially with a 30% pullback off a big down move. But right here is your pullback. Now here's so once you get the cross back over here where the green crosses the yellow, you could probably take that trade to go and catch a few more pips to the downside. I like seeing at least a 23% pullback. 38 is probably a little bit better. If it gets pulls back all the way to the 78 line, that's a little bit too deep. And then you're probably going to start getting into a basing area. Hopefully I answered that question for you. But here's the 38% line. See that this little wick right here, it wicked right into it. That makes this area is being respected where the blue zone is. You see it came back down, came back up, retested that area, dropped off again. The moving averages, basically what they do is they keep you trading in the correct direction. That's pretty much the long and the short of it is if you have all of them moving in the right direction where the fast one, which is the 5, that's the fastest one. 200 is the slowest. If you have the fast leading the pack with all the others in order, the fast, the 5, the 13, the arrow, and then the 62, that gives you the confidence that it's trending in the right direction. Then you're just going for your 5 or 7. I just go for my 5 or 7 pips. Hopefully that'll answer your question.
There's another question in here as well. I've asked for a bit of a reiteration because I don't really understand the first part of it. But Aman is asking, do you recommend trading during the money zone or outside of the money zone as well?
I prefer to trade inside the money zone. That's the time where the market's the most volatile and you're going to get the most consistent trades. Once you get out of this money zone, you're pretty much in the you're kind of in that limbo time of the day where you're more apt to have successful trades. You're going to be more apt to have your strategies work better inside the money zone than outside the money zone. Hence, that's why they call it the money zone.
Excuse me, Al.
Yes.
I was just making an observation. I could be wrong, but you see how your alert box has, like, for example, some of the currencies are on the M1 and some are on the M15.
Uh-huh.
Now, if your alert box is popping up, because not everybody has downloaded the dashboard, would it, like, does this mean that, for example, your chart, like say the Euro CAD, the Aussie Chef, right? The Aussie Swiss, 3 down is an M1. So you're getting alerts on the M1, not like the currencies we use the M15, like this one. So
correct. Yes. I'm not sure if it's specific enough or if I don't know. I know if you don't have the dashboard and you have a chart up, you're only going to get the alert based on the time frame of the chart that you have open. So in other words, if I didn't have the dashboard and I had a Euro Yen trade on, I would only be getting the Euro Yen alerts. If I had this on M5, I'd only be getting the Euro Yen alerts on a 5-minute chart down here. Now on the dashboard, you should get them for all the different time frames. I keep mine on a 15-minute. I was noticing the other week that if I had it on too high of a time frame, I wasn't getting the lower alerts. So I usually try and keep mine on a 15-minute chart on my dashboard, and that seems to be pulling up the M5, the M1, and M. I'm getting my 15. I definitely want my 15-minute alerts, and I found out if I had these on like a 1-hour chart, I wasn't getting the 15-minute alerts as readily. So I don't know if the dashboard itself is time specific for the chart that the dashboard is on. I do know that if you don't have the dashboard, you're only going to get the alerts on the time frame which you have the open charts on. And if you don't have the charts open, which is one reason why they came up with the dashboard, you won't get any alerts unless you have the chart in your open on your screen. The dashboard allows you to not have so many charts open and still be able to get the alerts. I hope that answers your question.
Yes, yes. I was just, trying to elaborate for other people too.
Yeah.
Thanks.
Yeah. So I try and keep mine on the 15-minute chart. That way I know I can get the 15-minute alerts. I always seem to get the 1 minute and 5 minute. But if I had these on the 1 hour, I wasn't always getting the 15-minute for some reason. Aussie Swiss 1 minute. That's, we can eliminate that. There again, here's a bounce arrow. Again, look at the time this happened. This was at 13:25 minus 7 hours. My chart time 7 hours ahead of my local time. So that was at 6:25 this morning. Again, I wasn't at the chart, but here again, it would have been a marginal trade to the zone. Looking at 20 pips minimum for the strategy, 20 pip stop, 40 pip target. I use I tweak my stop a little bit so I don't have as big of a stop. I also don't go for as big of a target, but then I can take a larger lot size. Then the results are basically the same. And I'm not in the trade nearly as long. We were looking at the Swiss yen earlier. Looks like that broke through. Swiss yen 5 minute. Let's go back to a 15-minute. Now this one's got lots of room to the downside here. Or at least it did. Here's the breakout. Here's the strong move down. Here's where it broke out. It consolidated, came down, tested the 200, pulled back, and then it pulled back. It has another strong move down, pulled back. Here's another strong move down. Starting to run out of steam on the downside on this one. You see, here again, other than for the 200, the 5, the 13, the arrow, and 62, all in the right direction. Did cross over on this one, I didn't like this because we had the 200, we had the arrow right here, but it had the 200 moving average right down here. And you see it came back down, broke it, gave a little head fake, based right here, bounced back up, retested these moving averages. So right now, this band of moving averages, the orange and the blue are basically, that's your upper channel. It's also respecting the 13. So you see as it pulled back, you see where the green one, where the green moving average pulled back to the yellow, but it didn't cross over. That was your pullback, got the crossover, didn't cross over, took another run down to the downside. Let's see where this thing is with the Swiss yen. The yen's still strong. The Swiss is getting strong. This is where it's starting to consolidate. Still, I'm looking at this as just a pullback right now. Yen is still strong. Swiss is weak. Yen is strong. Swiss is weak. Swiss is in the middle, but the yen is still showing the strength. So we'll be looking the strength to the downside. I'd like to see a little bit of a pullback on this. Let's go to a 5-minute chart and see where we're at. We may have a little zone right there.
On the 15-minute, Al, it's actually an uptrend if you zoom right out.
On the 15, yeah, it probably is. Yeah, because the 200 moving average is 200 is kind of flattened out. So that's, I would not be afraid to take this short. In fact, I would be more afraid to take it long. The question is, how far is it going to go? It's good. And let's see, let's expand this out here. What he was saying is that when you look at the charts, you have more green than red. So it is in an uptrend from this little move here. It is consolidated. It's now This is basically a pullback of the uptrend. So I'd be taking a Fibonacci from here to here. And right now it's pulling back to the 78%, which means this thing could go lower. It could retest this whole area right down in here. Let me go to a 1-minute chart and see what we got. So right now it's basing right here at the 76%. Now we're basically in the lower 25% of that big move up. We did say that it isn't an uptrend. It did pull back, pretty strong pullback. But now you see where the orange or the green moving average came up, couldn't cross over. And now we're starting to get across right here. So they're starting to get some consolidation. This is all the way on a 1-minute chart. So you're going to see it on the 1 minute first, but that doesn't mean it's going to stay that way. It still hasn't broken through this channel between the orange and the blue. Still hasn't broken through that. Here's an impulse move down, came back, retested. Here's the retest. So if it can break through, I'd like to see it. If it, boy, right now it's basically, it's about at the end of its run, I think is what I'm looking at here. Here's the lower 25% of the whole big upper move. Here's my 0 line, here's my 76. This is the bottom 25%. Here's the upper 25%. And right now it's, you see it came right down to the 76, came up, bounced, came back out, retested it, bounced again. Now it's trying to decide what it wants to do. Let's go back to a 5-minute chart. The 5 minutes not quite as volatile. Here's a strong move down. Now the question is to be from this move to here. First of all, let's see what the range of this is. That's 23 pips. So it'd have to pull back pretty much the 50% before we're going to get a retest down there. But we'll see. We had the retest, or the green came up to the yellow, couldn't cross over, came back down, made a new low. Here's a low, here's a lower low. Everything's still pointing down, so it's still not quite ready to take it long yet. I'd be looking at maybe selling a pullback. And to sell a pullback, let me just take this. We already marked a 25% zone. Here's the 61 to 50. Right now, it hasn't broken through this area. Here's my 38 to 50. This one came back up into this area. I'm going to take this Fibonacci off since we have our zones marked, and I'm going to pull another fib off of this area. So let me do that. Delete that one. And now I'm going to look at this, move down, retrace, move down. Right now I'm looking for it possibly to come back up and retrace into this little area right in here. Actually, I kind of like this a little better. Because here's where the last pullback was off this down move. I'm going to draw from here to here. You see that this pullback here was from this move down, pulled back 38%. Move right up. Oops, tweak this up right to about there. And so it came back 38%, made another low. Push this down to the low. Pushes up to the high. Now from this move down, now it's retracing 61% of this move. This was still the area we were looking at from before. Came back down. Here's where the sellers came back in again. Move this to the upper 25%. What we're trying to do is we're trying to capture the pullback back to retest the downside is what I'm trying to do. Because here's the zone. This is the bottom 25% where this blue area is right here. This was of the major move. Remember, it came down to the 78% of the bigger move to the upside. Switch in, let's see where we are with our strength meter. Here's the pullback. Here's the pullback. Yen is still stronger on the 15. We still have a spread by 3. I'll go back to my 5-minute chart and see what we got. Green line's coming up, the yellow hasn't crossed over. Here's the pullback. 61% of this move is pulled back 61%. And I'd venture to say if I could take this all the way up here, it's still within the 38%. It hasn't quite pulled the 38% of the bigger down move. This is still our target down below where the green zone is. If I can get to a 1-minute chart and get that green moving average pointing down, I'll get all the moving averages pointing down. Right now we had the crossover. See how this thing came up, then cross. Now it's crossed over to the upside. I like to see this green one come back down and cross back over the yellow. If we can get across in this area, we might have 5 pips to the downside. And then your stop could be right up in here. Here's a little pivot high. We have a potential target. I don't even have a green zone on this 1 minute. This is a Swiss yen. Now the fact it crossed over the 62, that would be a little bit problematic for it to short. This thing's looking like it wants to reverse back to the upside. Here's our move down. Here's our left leg of the W. Here's the middle of the W. Coming back and see if it's going to form another. This looks like it may want to do one of these little numbers here like this. Sort of is becoming more range bound right now. We still have that 5-minute zone down below here. At least we did. We still have this 5-minute zone.
We've just had a few of them at 8:30, Al. We had the CAD Swiss, the Pound Aussie. Another one here too that I'm just trying to bring up.
So they weren't on the 15-minute, were they?
These are 15-minute. The Pound New Zealand, Pound Aussie, and the CAD Swiss all just came in.
Well, I didn't get the Pound New Zealand. Why did that show up?
Nor the Pound Swiss.
Pound Swiss.
You get that one.
That one's up in the zone, so that one's not going to work. Pound Swiss.
No, I'm just saying, like, when you were saying you didn't get the pound New Zealand on the 15, you also didn't get the pound Swiss. Ava, what was the other one, honey?
The Aussie, hang on a minute. It was the pound Aussie, the CAD Swiss, and the pound New Zealand.
And you didn't get
About
any.
5 minutes, see if that makes a difference. Yeah, my 15-minute are getting kind of slow getting in there. You have a lot of 15 minutes and I'm not seeing them here for some reason.
I wonder if it has something to do with the charts not being on the 15, do you think?
Well, that's what I'm kind of wondering. Well, the charts, I mean, I had this on the 15. And it's not coming up on the 15.
I mean the actual chart itself. I mean,
Well,
I see them all coming up anyway, but you're missing a lot of 15s for some reason.
Yeah. I don't even have the pound Swiss up here. We have to investigate that problem further.
Well, let's have a look at one of them anyway. And
okay, here's the pound Swiss. Here's a pound Swiss right here, 15. No arrow there. What was the other one that you said?
There was the CAD Swiss, the pound Aussie, and the pound New Zealand.
Okay, pound Swiss, no trade there. CAD Swiss.
The CAD Swiss. CAD Swiss.
Is that what you said?
No, CAD Swiss.
Yeah.
You've got pound Swiss.
This is CAD Swiss right here.
Yes.
Yeah, here's the arrow. Here's the zone. No room there. So that one's not good. Next one.
And then there's the pound Aussie.
Pound Aussie, 15-minute.
I'll
Right
go
up in the zone. Arrow right in the zone. No trade there.
And the pound New Zealand.
And the pound New Zealand.
Yeah.
15 minutes. Again, same scenario there. Nothing.
Okay, well, I do have a question for you though, if you have a moment to take it.
Of course, I've got all. I've been ready.
Okay.
He's born ready.
He's born ready. Okay. So Aman is asking, do we still follow the same take profit and stop loss of 2040, regardless of what time frame? And what else is he saying? Do you have, okay. And he says, mostly I stay on my trades until my stop loss hit, hoping the market will turn around, but I can't wait. And it comes back up and closes on very small profit and loss. Do you have any motivation on how to handle this? It sounds to me like he's wondering about the size of the 20 to 40 ratio, regardless of time frame. And
I think the 20 to 40 ratio is pretty much based on a 15-minute time frame. And basically, the 20-40 ratio says basically, unless you have the range, it really doesn't really matter much if it's on a 5-minute chart or 15-minute chart. If you have the range on a 15-minute chart, I say that would fit the criteria. Oftentimes what you'll find out though is that if you're on a 15-minute chart and you go to a 5-minute chart, you'll find out there's going to be a zone on the lower time frame charts that's going to block it. So you oftentimes won't get the 20 pips. I'd say the 2040 is based on a 15-minute time frame. If you go to a 5-minute time frame, you may want to the only reason I go into a 5-minute time frame would be to be able to tighten your stop and maybe shorten your profit margin a little bit. I just like I like looking at the direction on a 15. I go down to a 5-minute. If I have the range on the 5-minute, I'll take the trade. If everything's moving in the right direction, I have the strength to my favor. But I say the 2040 is pretty much predicated on a 15-minute chart. If you're on a 1-hour chart, then you're looking at more of a 50 pip target, 100 pip stop, but you're going to be in the trade a lot longer. Hopefully that answers your question. Usually the smaller the time, the lower the time frame, the lower the profit margins are. Let's just say that.
Then you're scalping, so you want to get in and out.
You're getting more into a scalping mode. But I said I like looking for. I double my lot size. I can take twice the lot size with a 15 pip stop as I can with a 40 pip stop. But I want to make sure that it doesn't hit my stop too. That's the other thing. I want to make sure there's enough barriers and zones, moving averages that gives me the numbers. Like right now, if I were to take this trade, I want to have my stop pretty much up in this area. And if I got in, I would want to be getting in pretty much right about where it is right now to the short side and have my stop up above this blue zone right here. That would keep me, because you see where I pulled back to the blue moving average and it was rejected. So now if it kind of breaks this little trend line right here, then I have room to the downside to my green zone. So if let's say I get a break of, say I get a close into this blue zone, come down there, I've got my 15 pips to the green zone, and I have my stop up here, probably somewhere above. Well, I could probably keep it above the blue zone. I'd probably keep up a little bit higher just to keep out of harm's way, but I would probably get out of the trade if I get toward my 15 pip stop. I may put a 20 pip stop in there just as I'm watching it. But if I do a set and forget, then I'll just I probably put a 20 pip stop and then maybe decrease my profit, my risk factor, my lot size. But right now I like this little pullback here. It came right up to here, came back. We saw this move down, pulled back, second wave, pulled back. Have a little bit of it. It's basically following this blue trend line. And now we're waiting to see what happens with the moving average. You can look at this moving average. You see the green one came up to the yellow, couldn't make it, couldn't cross over. Now we have this little wedge right here. If it can break this area, I'd like to see it kind of break, come back down, retest this trend line, and then go to a lower low. So right now we have a low, a higher low, or a lower high, lower low, lower high. So right now we do have a little bit of a trend going to the downside, somewhat of a channel going to the downside.
So further to that question, Al, can I just pick your brain for my own edification as well as everybody listening?
Sure.
So based on the 2040, which is basically a 2-to-1 risk per ratio, would you keep that ratio in mind regardless of the time frame? So for example, if you're scalping on a 1 minute and you're going for 5 pips, would you recommend having your stop loss at 10?
That would be doable. I think as a rule of thumb, if you go with a 2-to-1, I think that's a good starting point. I like seeing where the prices and where the channels are and where the moving averages are. I don't use 10 I would use the 5 to 7 pip target pretty much as my standard target ratio. My stop, I'll usually start with a 15 pip and see where that takes me. In other words, like if I were to take this one, and I may take this trade here on this, if it closes up below this trend line, I may take this trade. So if I get into this trade, say right here, I'll be looking for a 15 pip stop. So that will 15 pip will put me right about here, which is right at the zone. Now that's still not too bad. It's still fairly safe, but I would rather keep it on the other side. I'd give it another 5 pips. I'd probably still go with the same target of 5 pips or 7 pips. If everything is moving in the right direction. If I have to, now from this point, I'd go back to my strength chart, the Swiss yen, and see where's the Swiss. The yen's still strong. The Swiss is starting to lose a little bit of ground. So that tells me that was a pullback. Swiss is still relatively strong there, but now I have the 7. Before I had a 7.5, I think now I'm back to 7.4. So there's my 3-point spread there. Excuse me. It was a 7.4, yeah, now it's a 7.3. So I've got a 4-point spread on my 30-minute. I've got a 3-point spread on my 15-minute. I have it's starting to give up the retracement on the 5-minute. The end is still strong on all 4 time frames. I'm still looking at this thing's not done going short yet. So with that, I would put my stop out of harm's way, but I would keep an eye on it. If I take a little bit bigger hit, well, I take a bigger hit. But right now, I like the idea. I like the fact that the green moving average pulled back up, couldn't cross over. We have a nice little wick right here. I'm on a 5-minute chart, so this is about as low a time frame as I want to be charting off of. But I will look for maybe 1 minute entry. I'll go to the 1 minute chart right now and see what it looks like on this. And you can see right now, I did get a little bit of a cross of the yellow. So actually it pulled back, tested my trend line. Tweak this a little bit here, bring that back down just a little bit. You see it came back down. So basically what's happening is it's respecting this trend line. And it also formed a new zone down here on the 1 minute. So it's right now, it's still kind of sort of consolidating in between this region and this region, 12 pips, point to point. It's hard to get your target of 5 or 7 pips when you're right in the middle of the trade. Right now you're in the middle of the zone. You're only looking at 6 pips at best. It's going to have to break through this zone before it's going to be confirmed that it's going to go lower. So here's your lower wet, lower trend line, and it's found some rejection right in this area. Now we'll see if it's going to come back and retest this little wick area. But you see it formed a new green zone, formed a new red zone, and just saying, like right now, just saying, I'm not sure what I want to do. How did I get into the Swiss yen trade? I don't remember even putting a trade on. I might have done that accidentally. I just noticed. I just noticed that.
That's a good question.
How'd that happen?
I don't know. Maybe you accidentally clicked on.
I must have accidentally clicked it somehow, but anyway, I got it onto a buy right now. So
maybe it's to be fortuitous.
Maybe the trading spirits are trying to tell me something here. Well, we'll see. All right, but while I'm in it right now, I got to figure out what I'm going to do with it. That would be what you call, folks, a trading error somehow. Taking trades you don't even know you took. That was not planned.
Hey, it may work out well for you.
Well, it might. Right now, we did get the little crossover right now. It does seem to be having. Let's see what my.
See, you can trade without even thinking about it.
Yeah, the yen is starting to give up a little strength there. Swiss is still hanging in there in the middle. That's still pointing up. That's still pointing up. And the yen was flatlined for a while. We'll just have to kind of play the hand that we got right now. I would say if I get it, good chance it's going to come up and retest this zone right up in here. Here's a 23%. No, we could do this. Just back this off a little bit to this where the last peak was. And it could be, so from this move down, retrace back to 61%, formed another red zone. So this one's got some significance to that point. Back that off. This is hasn't penetrated this zone. So that would be, I'd want my stop up in this area someplace if I were going short. Now the fact I'm long on this thing, I've got to put my stop someplace. And I would be putting, I don't even have a stop set. So I'm going to be putting my stop at, let's see, since we're here. Let's see. I probably have to put my stop down here in this zone. I probably hang it down right about and just below this green zone here. I keep that as a barrier. So 120. Let's see, how many pips is that? So from here to where I got in, That's a 10 pip stop. I can use a 15 pip stop on this. So I entered this thing on at 120.40. So 120, let's see, we are on a buy 120.40. So I'm gonna go say 120.45, we'll call it. 170 on this. 20.47, 15. There's 15 pip stop. Let's see where that puts us here. Puts my target up into this range. My stop is, see right now my stop is way down here. So I've got lots of room for my stop. It is moving to the upside. So I really wasn't real crazy about going short. Now we're going to see if it can come back up and retest the 61% retracement of this move, of this big down move. Came back, tested it. Now it's coming up to retest it again. My moving averages have crossed over. Here's my trend line. I'll put my first hit right there by the dot. Here's my anchor. Here's my first hit. Here's a little bit of a breach. Nothing bad. We can take except one of those. And my target is, I've got my target up here. If it comes up into this red zone and I'm not out of the trade by then, I will get out of this trade. In fact, I probably should just get out of it now since I really didn't want to take this trade in the first place. But we'll see how this candle closes. Right now, all my moving averages, the green is leading the yellow, which is leading the blue. And we had the close and cross of the 62. 62 is kind of flat. Here's my 200. This could be where this thing could be heading up to retest the 200 moving average, which is really pretty much right up in this area. Right now, if I get it comes down to this, if it comes down this trend line, closes below the trend line, I'll be out of this trade. Until then, we'll see if it can kind of come on up and maybe retag this thing here. I kind of like the fact that here's this little wick right here, ended up higher than this one. So we have a low, a higher high, a higher low, a higher low, pulled back. We hasn't broken this high. This is still the problem high right here where the zone is. But it is making new, here's a low, higher low. Here's a high, higher high, higher low. A little bit more of an impulse move here to a higher high. And now it's seeing if it's going to break through. And so if we get a close below any of these moving averages, I'll be out of this trade. It's getting right up to the 50%, not quite the 50%, couldn't hold it, couldn't break it. And now we're starting to get a nice little retracement back here. And if we look and see, I'll bet the yen is getting stronger again. Yen is stronger again. Swiss is getting weaker, stronger. still in the middle, still weak. This is why you don't want to be trading against that. If we get a close below here. Now this is still, right now it's still a higher low. Here's my low. There's a higher low over here. And it came right down and retested that. It did break the trend line, but it couldn't break this little zone right here. This would be what I call the trap. Broke the trend line, closed below it, but the trend line still proceeds on, still heading to the upward side. Sort of basing right here. Sort of like right now we're getting to a point of indecision. Is it going to close below the trend line, come back up and retest and go short? Or is it going to, this was a head fake bounce, still made a higher high, a higher low, made a higher high. We'll see what it's going to do. This is going to be a critical point. You see how it's consolidating? All the moving averages are consolidating. The green one crossed over yellow, started moving up. And right now it's still, now it's starting to cross back over to the yellow. So this could have been just a nice little pullback. And I think I'm going to exit this trade on the, if this thing makes a new low, I'll exit this trade. And I'll give up right now I'm at 2.2 pips. And I think I will just see if it pulls back to the trend line, and I'm just going to close it out. This thing looks like it wants to go short. If I get a close below the 23, I may take this one short. See if we get an arrow. Let's go back to the 5-minute chart. See how the green one came up to the yellow. Now it's hooked back over, didn't cross it on the 5-minute. That tells me this thing still has room to the downside. All the moving averages are still pointing down. Now it just crossed the trend line, closed below the trend line. Now it's coming up to retest the trend line. Also retesting the 38% retracement. Had a little wick right here. I can actually pull this back down a little bit tighter.
Quick question for you.
Okay.
Towards the end of the session, Mark says at the beginning of the call, we said that we would look at the Aussie yen again for a possible sell. Is there still time for that?
Aussie yen, Aussie yen, Aussie yen. Ooh. Let's see, this is about where we were talking. This is where the alert was. Let's see where our strength is. Aussie yen, that's getting back to normal. Aussie yen, that's still not too bad there. To the Aussie yen short, take it to the short side. Aussie yen, Aussie yen. Yeah, it's possible here. Do we have room to the zone from here to here? 20 pips. I would say it'd be contra trend trade, but everything's in the right direction. We have just got a new arrow on the 15-minute chart. Let's go to a 5-minute and take a look at that. Let's go back to 15, mark the arrow. Um, Which I like that better than the other one we were looking at. 5 minute. Let's see if there's any zones in the 5 minute. Nothing there. Pull back. Here's where the arrow was. Does have room to the downside? I would say, yeah. If I don't think I'll take that one. Take that one short. Go for 5 pips. 15 stop, 7 pip target. And we could put the stop. We could just follow this thing on it. We could go for more than 5 pips. So I'm going to mark the target zone. See if we get a bounce off of that. I'm going to mark it down here. Then I'll put the stop and put the target down here at 84, 89. Change my target profit, target zone. Let's go for 15 pips, 84, 91. Try and go for a little bit more profit. If it gets down to this one and it bounces, I may just pull the trade. But for right now, I like this moving average right here. It came back up, tested it. Strong move down, came back up. Green did not cross the yellow, tagged the yellow. That gives me, I want to keep the stop above the blue one. And we can just maybe follow it all down to either hits my target or hits my stop. And with that, we're just about out of time. So here's one trade. I'm okay with this one. Here's my target zone. We had 20 pips to the downside. So we had, and we had a bounce. There's the first arrow, pull back. Next retracement. It still has some momentum to the downside. Did we cross over the overnight low? I think we did. Previous overnight low. Yeah, it was over here. That was yesterday's overnight low. Right, here's yesterday's low. Here's the overnight low. We've already crossed that before the money zone. So we are getting a breakout to the downside. And we'll see what happens. And with that, we're just about out of time. I don't know. I'm thinking Jackie should be over in the other room here at 9 o'clock. Again, thanks everybody for coming in. Thank you for your questions. Hopefully we answered them adequately for your satisfaction. And we'll see you again tomorrow. Same time, same place, 7:30 to 9. Have a great day and take care.
You will, everyone. God bless.
Have a great day, everyone. See y'all tomorrow.